Welcome back to the Chill Mom Boss Show, and I'm your host, Michelle Hon. If this isn't your first time tuning in, you probably noticed that this is not my usual studio, the fancy light or this nice sofa, right? This is not my home office. It belongs to our guest, Mr. Jonathan Ang.
Hi.
And today he will share with us how you can maximize your profit. And without further ado, let's welcome him. Hello, welcome.
Hi, thanks for having me.
Yeah, so why don't you just start off with, introducing yourself to our audience, what you do and how you help people.
Right, so I think partly my main job is to empower people, give them financial knowledge so that they can actually make the best decision on how to buy the best stocks for themselves. So we mainly focus on US stocks, and and we also actually have like courses, and we're actually an online school to teach people how to manage their finances better.
How do you get into this?
Oh wow, it all started very innocently. I think back when I was young, when I was in junior college, I was like 17 years old, and then one of like my friend, she's really nice, so she came across like this seminar talking about investing, and back then I was like this kid who is like a nerd. Like I was a total gaming nerd, and I could sit in front of a computer and I would just like play Counter-Strike. It's like a shooting game, like for 48 hours straight. And then I wanted to go on for my third day, but my nose bled, so I was like, I'll take a break. I'll take a break. Yeah, so I'm the kind of geek that I don't think that I will work well. Like I always feel like working is something that's very scary for me because I'm more of like, I like to stay at home, I like to be in front of a computer, and I've already been interested on how to make money, right? So back then, the internet was a lot about, I think it was like click marketing, where if people click onto your web page and then you start earning money. I think it's called, I think it's Google AdSense.
Right.
Yeah.
Okay. Yep.
But I couldn't get it started, so I thought like, why not discover about investing? And then I read the book Rich Dad Poor Dad. And then the book kind of scared me. To some people, it's really inspiring. But to me, it scared me because it made me realize that if I did not do something about my life, then I may really be trapped in a rat race. So I was very fortunate and blessed to be given this like information and resources that led me to learn about investing. And why not trading, why just investing into just stocks, was that I was just really lucky. The first teacher that I met talked about investing in a very safe way.
Right.
So I was told that how we actually buy into stocks is like how you buy socks, right? So I mean, when there's a Black Friday sale, everything is going at a cheap price, right? That's where you will buy stuff, right? So it's the same as the stock market. You want to find the value of the companies, and then you want to buy them cheap, and then you want to do your homework as well. Because I think it really struck me when my teacher asked me, if someone were to ask me to invest $1,000 in their business, what kind of questions would I ask?
Yeah.
Right. So the first thing that came to my mind was like, oh, definitely he has to be earning money.
Yeah.
Right. He has to have cash flow coming in.
Yeah.
He has to be debt free as well, because I don't take over the business with debt.
Yeah.
Right. And then I realized that a lot of people are not asking these questions when they invest into stocks, right? And stocks are real companies, right? Apple company is actually a stock. Google, Facebook, right? Adobe, everything that we see around us, most of them are listed companies, right? So that's how I kind of got started innocently.
Right. So basically, you're like, I'm not gonna get a job. That's not me. And you read this book. In a way, you say it was scaring you, but in a way, it's like scaring you, but it's a push for you.
Yeah.
It's a push for you to like not get into the rat race and just do something for your life. And I think that's very inspiring. But I remember being young once, and I remember like not being able to choose which direction to go.
Right.
Right? And how did you decide that, okay, I'm just gonna learn about investing and this is it? I'm gonna go deep in this.
So I think I saw this very interesting piece of statistic, right? So I was just looking at the top 10 richest people on the Forbes list, right? And I realized that all of them are either business owners or they are investors of a company, right? So you can see Bill Gates he's on top there. He's the founder of Microsoft. Elon Musk, founder of Tesla. You have the two Google founders, right?
Buffett,
and Warren Buffett, who invests in companies. And I think the reason why I doubled down on investing because I felt like I had no talent, to be honest. Because back then I was always this like underdog. I didn't really do very well in school, I would say. And when I was in secondary 2, 14 years old, I actually tried doing business. So I saw like on Alibaba.
Yeah.
Back then Alibaba was really early. There were a lot of
Products.
there are a lot of
and stuff
products
that
on
you
it.
can
Yeah.
look for, yeah.
So I actually love this game. It's a shooting game, right? So it's called Battlefield. And then I saw that it was going half the price. And I was like, and I knew a lot of my friends wanted to buy this game.
Yeah.
And I was like, oh, I could buy, I can't remember the exact price, right? But
Yeah.
it's somewhere around like $30.
Yeah.
And then
You
I
could
knew I
have
could
sold it,
sell it at
yeah.
$60. So that's why I really plowed, I think, around $300 to $400 to buy my first batch of like CDs.
Nice.
Right? But when the package came, I was shocked because I was scammed. So the person gave me like a cheap ass earpiece, and that's where I realized, wow, maybe I'm just not cut out for business. Right? So
What a sad story. I thought you like, oh, that's your first, venture into entrepreneurship, but then like,
it turned out bad. That is why I.
But it's a lesson. It's
Yeah,
always a lesson.
It's a lesson, right?
Yeah.
So obviously, when I was young, I didn't really take it positively, but it was a blessing in disguise because it really made me feel kind of like that I was not good. I didn't really feel like I could be a business owner. I didn't feel like I could be an entrepreneur. I didn't really have much self-confidence. So investing was like a ray of hope to me because the idea of just analyzing, using my brain, just looking at the companies, and some of these companies are not hard. Like they are just under our nose. For example, when was the last time you swiped a credit card? Like just earlier this day?
Just now?
Yeah, just now. Yeah, so you have these companies like Visa and MasterCard.
Yeah.
They've been growing at 15 to 20% every single year, right? And because they grow their earnings and their revenues, their stock price also grew as well.
Yeah.
Right? So the stock price will match the value of the company. And that made a lot of sense to me. And it made me feel that, I could maybe not be cut out for entrepreneur. I may not be good in studies. I may be bad in this and bad in that. But all I know is that I have to be a good investor and I could still make it in life.
Yeah.
And that was very promising to me. It felt like a promised land. And I kind of did my math, even if I couldn't pick the right companies. All I have to do is to invest in the S&P 500. Right? So I think for folks who do not know what the S&P 500 is, it's kind of like the top 500 companies in the US, and then they lump it all into one basket. So when you buy the S&P 500, you're buying into the top 500 companies in the world. And the thing is, the S&P 500 allows you to cheat. So if the 500th company goes bankrupt, the 501st company will be promoted into the S&P 500.
Okay.
So it's like cheating, right? Because if you had your own portfolio, if one of your stocks go to zero, you're going to make a loss.
Yeah.
Right, but if you buy into the S&P
S&P,
500, you
right.
don't really make that loss in a way because
Correct. You
the
still have
501st
499 that's still there.
right, is there, and the 501st company will be promoted and take up the slot which
Right.
the company went bankrupt.
Right.
And unless all the companies in the US goes bankrupt, it's very tough for you to lose a permanent capital. It's very tough. I mean, statistically, it's possible, but the chances are not high. And I went to see for the for the past not just 10 years, right? For the past 100 years, the S&P 500 has been going up at 9%. So I entered into my spreadsheet, being a nerd that I am. I calculated if I were to just save, $500 a month, right? In 40 years, even though
By 9%.
right, 9% every single year, and I would just reinvest whatever I earn, right? And I can be a millionaire. And that was like, wow, even if I'm a failure, if I become a security guard, I can.
I still have that growing.
Right. I'm looking down on security guard, but
Yeah.
I mean, like, I'm just trying to paint, like, what's the worst thing that can happen to
Correct.
me if everything didn't work out. So that was why investing was very interesting to
Was
me.
it very appealing to you because you can calculate it, you can see.
Exactly.
Yeah, and it's not dependent on you. It's dependent on this other company that's running their business, and whoever running it want to see profit for themselves as well. So it makes sense.
Exactly, and
Right.
in a way, when I invest into a company, I'm having the top talents in the world working for me. Because when I invest in a stock, I actually am a legitimate owner of the business, right? Just that last time they used to give certificates. Like for example, if you buy Google, they'll give you like the Google certificate to say that Michelle Horn is like the official owner of Google.
0.11%.
But now because everything is digitalized, so people start to not link that buying stocks are actually the same as buying real businesses.
Yeah.
And so people have this misconception that it's actually gambling.
Yeah.
But actually it can be done in a very safe way as long
Correct.
as you are educated.
Yeah.
Yeah.
So you need to understand what is it all about.
Yes, exactly.
Cool.
And I would say like knowledge is really 80% of the game won. Yeah, at the start, right? And then once you get the knowledge, everything is just discipline, right? Getting that $500 out to reinvest, right? Not selling, not panicking, knowing that even if let's say Visa's stock price drop, you can see people are still swiping Visa every
Correct.
day, right?
Correct.
They're using their credit cards.
Yeah.
So it's really being very logical and thinking of yourself as not a stock buyer, but the owner of a company. Yeah. So
Yeah.
it's kind of like, for example, Michelle, like if today, I don't know how much you bought your house for, but maybe let's say, for example, $1 million, right? And let's say some property agent just knocks your door and say, Michelle, the market is doing very badly, your house is worth $700,000. Like, we urge you to sell because, everyone's selling out. Will you sell your house?
No, I will still. As long as I still like that house, I guess I'll still stay in it, right?
Right, yeah. So it's the same as the stock market. It's like
Correct.
the craziness, right? People are so affected by the
Potential
opinions.
loss.
Exactly, right. And they get affected by the sentiments of the market, which is fueled by a lot of emotions in the short run.
Yeah.
So I always tell people, in the short run, the market is like a voting machine. People vote how, for example, good your house is, how bad your house is, and then they will bid for a price accordingly. But in the long run, because of inflation, because people start to see the value of the house, right? The value of these companies will actually go up as long as you're earning more and more money. Yeah, so it's the same as property, right? So there's actually like a survey that's done that says like why property owners tend to make more money. It's really because it's hard. Firstly, it's hard to sell fast.
It's not very liquid, right?
Yeah, and people tend to be more careful when making property purchases because it's a high ticket
They
item.
don't trade as often.
Yeah, right.
Yeah.
Yeah. So if that same mindset can be moved to stocks, right, into buying companies, then I think a lot of people can do well.
Yeah.
Yeah.
Okay. Yeah. That makes sense. That makes sense. So for like most of our viewers are moms. Either
Yeah.
they have started a business or they may not have started a business. Let's just say some of us has dabbled.
Right.
Some of us is like brand new. Oh, sounds like it makes sense. I do have some money. I want to get into this thing. So what's the easiest way to start investing?
Right.
What do you invest in? What S&P, what REIT, and what EFT? Like it all sounds very foreign to some of the.
Right. I would say I think the easiest and safest way is to firstly, I mean, I understand most of the audience, they're actually business owners. So I would say unless you have spare cash,
Yeah.
right, that's where you invest. Because I'm just thinking from a business point of view. For example, if you spend $1 on advertisements and you're getting back $2 in revenue, then
Yeah.
you're making two
That's
times.
an investment itself.
Right,
Yeah.
your money. So you shouldn't be taking money from business out to invest, right? Because
Yeah.
you have control over your business, you're going to 2x your money every time.
Correct.
Maybe that percentage is going to be different, right? So I would not recommend people who are doing business and they know that for sure their business is going to do well to invest. Because
But you can still
that's
take
high.
a portion of like dead money that's already sitting in your bank account.
Yes, correct.
Right? So
Yeah.
let's say I personally, I would reserve maybe 6 months to a year's running money in the bank. The
Right.
excess, I would want to invest it somewhere so that it grows the money. Otherwise, it's inflation, right? Your
Got
money
it.
is just
Yeah.
going down.
So then there's this second group of people that you're talking about that has that surplus cash, right?
Yeah.
And then that's where I think the safest thing that I can think of is the S&P 500. So the ticker symbol is VOO. It's by Vanguard. It's one of the lowest cost index. Even the worst richest investor, Warren Buffett, has said that if I were to pass on, right, I would just ask my family members to invest in the S&P 500. I think it's really quite hard to imagine America not being like the superpower, or even if China takes over, I think America will still be second. And you can see a lot of these companies are around us, you know, Apple, and all these are in the S&P 500, Apple, Google, Facebook. So if you are someone who's a beginner, you are very risk adverse, right? You can basically just put aside some amount of money every month. And this is what we call dollar cost averaging. So every single month, no matter whether the US stock markets. So when I say US stock markets, I'm talking about S&P 500.
Okay.
Because it represents the whole US market.
Right.
You know, just put $500 or a few $100, just invest in it consistently, whether it goes up or down. Because in the long run, it's going to go up because of inflation.
Okay, so let's say even if I have 10,000 right now, I want to invest, don't put the whole 10,000.
Right.
Put 500, 500, 500, like that.
Yes. So especially for beginners, right, the last thing you want to do is to like put everything,
Yeah.
and then every day you're going to check your phone, oh, is it up, is it down? You're going to feel very anxious and you're going to lose sleep, right? Because that's the last thing you want to do. In fact, I always tell people, especially when you are, if your portfolio is small, it doesn't make sense for you to be too active as an investor.
Yeah.
Because let me just give an example. If your portfolio is $10,000, not saying 10,000 is small, right? But let's say if you make 10% more on a $10,000 portfolio, it's only $1,000 more, right? It's not a life-changing amount, right? It's not going to be huge, right? Unless you have $1 million, right? And you can optimize and make 10% more, then that 10% of 1 million is 100,000. Then that's life-changing. That's where you can consider to really make it full-time, right? So I would think like, I mean, looking back, you know, my number one mistake when I was young was to try to optimize the gains.
Try to time, you mean, optimize?
Exactly, try to trade in and out.
Right.
While I could have spent my time to start a business and to generate more cash so that I can grow my pot bigger, such that when it becomes big enough, it makes sense for me to spend my entire time optimizing it. Yeah, so that's kind of how I think of it. And that's why I think you're doing a great job, because you're helping people to generate cash flows. And I think, again, like most people have income problem, not a savings problem.
Correct.
And you know, going to the S&P 500 is the safest way, I would imagine. Yeah, and when you start making money, that means, let's say if you have $10,000, maybe start with something that you can afford to lose and yet you won't lose sleep, right? Maybe you put $500, just dip your toes in the water, try it, okay, and then when you make some money, right, you understand it better, then that's where you can start putting more and more money into it. Yeah, and I think one thing is that a lot of financial consultants, they are actually putting your money in the same place into the S&P 500, and they charge you a fee for doing that. So you might as well just start your own brokerage account.
So it's pretty easy to start your own brokerage account.
Yes, especially, okay, I would say for Singaporeans, you can actually, a lot of brokerages allow you to sign up with SingPass. So within a day, your account can be up, within a day or two, right? I think we live in a world where brokerage accounts are much, much easier than the past. Yeah, back then I have to go down to the office, fill up some forms, like you just get confused. But nowadays it's pretty seamless. Yeah,
I see.
One platform I think would be great for, I think Singaporeans or Malaysians, you can consider Fund Supermart One.
Fund Supermart.
FSM1.
Okay. Yeah, we'll add the link.
Yeah, by iFast. Or if you're someone who's international, because I know you have international audiences, you can consider Interactive Brokers. And that's where they're the largest brokerage in the world. All the hedge fund managers use them. They're pretty safe and they're listed as well. So you can, I know because
you can also invest in them.
Yes, you can invest in them.
you can invest through the brokerage and then invest in the brokerage. So like win-win, right?
Yes. And because I think the benefit of being an investor, you can take a look at the financial health of a company. And I think Interactive Brokers is pretty good. Right, and they've been here for decades.
Before you buy, you can actually look at the financial health and all those studies.
As long as they are listed. Yeah, FSM1 is also listed. Yeah, so I only go into companies that I am confident, and of course they are regulated. I think that's important as well. Yeah, so these are the two main players. Yeah, so just set up an account, buy S&P 500, and close your eyes, and then
and set an alarm in your calendar, transfer money, or you can set up direct debit.
You can do a direct debit using FSM1.
Okay.
So
back to the S&P 500 investing, right? How long should people expect before they see return?
Right. So this is something that if I can answer, then I'll be God.
Like people will be like, okay, so you say like, you know, but what if I need the money? I think that one of the biggest fear is that what if, you know, I put my money in there and then I need that money for emergency and it's stuck or, right? Yeah.
So I think generally I think what you say, right, you have to set aside 6 months to 12 months of
correct.
emergency money, and then you only use money that you can really afford to lose, right, to invest, right? When I say afford to lose, it doesn't mean that what we're doing is risky, right? Because these are your top 500 companies, they have sound financials, right? It's almost impossible to see Apple collapse the next day, right? I mean, everyone's using Apple, even in this office, I have an Apple phone here.
Same.
Yeah, you know, so I think why I say that is just to prepare yourself. Let's say if there's volatility, the last thing you want to do is to set yourself up for failure, right? Most people fail because they become too emotional. So you want to remove that out of the equation. So if you're going to use money that you don't need anyway in the short run, you're not going to be too worried, right? And more importantly, I know some people, they like to manage money for others.
Yeah.
Right? That's the last thing you should do if you're not experienced, because people will start hounding you. Hey, why is the stock market this? Why is the stock market that? Then you know it's going to be very pressurizing. And also, more importantly, don't borrow money to invest. That's the recipe
That's
for
where
disaster.
people lose money, right? That's where all these like fear or misconception about. But I hear people lose a lot of money, lose their house when they invest. It's because they borrow against their investment.
Yes,
Okay,
exactly.
can you explain a bit?
Yes. So if you're borrowing money to invest, you can lose more than what you have, right? For example, if my net worth is only like $100,000, and then I borrow $200,000 to invest, and if I lose these $200,000, suddenly I will be forced to be wiped out, right? Like my
Correct.
100K is wiped out, and I still owe
Yeah.
$100,000.
Correct. Plus interest.
Yeah. So actually everything is really simple. As long as you do not invest what you do not have, then there's nothing to worry, right? Whatever you put in is what you'll lose, right? So, I mean, that's the maximum, right? But I think for the S&P 500, generally, you know, if you have a long-term mindset of 3 to 5 years horizon, right, you should start seeing gains in a 3 to 5 year period, right? So I would say in the short run, it depends on luck, right? Because, for example, a recession can come the next day, and then I'll suddenly look like an idiot if I say within a year you can see something,
Yeah.
right? But that is something that we can't control. No one can ever predict it, right? If anyone say that they can predict, then you better keep your wallets and, you know, just be careful, right? Because what they are promising may not be real, it may not
Correct.
be true.
Yeah.
Right, so I think if you have a 3 to 5 year long-term mindset, you can do it. So there's this very famous stories that was published where this like janitor in the US, you know, a janitor doesn't earn much money,
Yeah.
right? But what he did was to invest in the top 5 to 10 companies, right? Every time he gets his pay, he just buy. Every time he gets his
Oh.
pay, he just buys. And his children got a shock when he passed away, because they realized that he had 3 to 5 million US dollars that he compounded over his janitor career.
Right.
Yeah,
Okay.
and it's all because he was just disciplined and he was just buying and just collecting them like stamps, you know. Yeah, so the mindset that you should adopt is kind of like you want to collect assets, just like how you save money, right? When you save money, you don't have the intention to like just sell it. I mean, not sell, like spend it away, right?
Correct.
So it's the same. So think of like your investment account like your savings account, just that it's a savings account on steroids, right? It will grow much
Yeah.
faster at 8-9%, as we have seen for the S&P 500 for the past 100 years. So I mean, this is something that has a track record of 100 years. So if someone is still not convinced, then I think I'm not sure what can convince them. And the reason why this S&P 500 keeps going up is because things get more expensive due to inflation. So for example, when things get more expensive, companies will charge higher, right? And they'll earn more money. When they earn more money, they become more valuable.
Yeah.
And then that is why
The stock
stocks
price goes
will
up.
go up, right? So collectively, the whole US, your companies are becoming more valuable because cost of living is increasing, right? And that is a very scary thing, because if you take a look at the cost of a Big Mac, right? It doubles every 10 years. Right? So if you put your money in the bank, then it's as good as like every year.
Having your money every 10 years.
Exactly, right? Your purchasing power drops. And you know, why is it such a scary time now if you're not a business owner or if you're not investing? It's because recently there's a lot of money printing in the world, right? So the money that we printed
Yeah.
for the past year was more than the combined money that we printed for the past 20 to 30 years. I can't remember the exact statistics, but
Right.
it's crazy. We printed so much
Correct.
money. So
So the value of whatever we have is just getting lesser and lesser.
exactly. And don't
Right.
be surprised that, you know, your cost of living is going to go up.
Yes, I've already seen it at the grocery store. I'm like, I thought broccoli was this price last week. How come it gone up again? It's true. Moms would know.
Yeah, and you know, if you still want to keep your money in the bank, you know, you will suffer at the end. You'll be that
Yeah.
sucker because of this. Call it responsible or irresponsible.
Yeah.
I mean, I don't like to go into politics, but
Yeah.
what I want to focus on is
Helping people
Right, exactly.
maximize the money and make the money worth, really, right?
yeah, and
Okay.
how we can actually focus on things that can really move the needle for
Right.
ourselves rather than
Okay.
complain, nothing changes, right? So a lot of this money is actually going into the stock market, right? So if you are not invested or if you're not doing business, right, you will be losing out tremendously in this decade, for sure. For sure. The statistics is out there. There's
Correct.
nothing we can deny.
Okay.
Yeah.
So the way you put it, I like that. It's very simple. You know, S&P 500. You can just start your own brokerage account. But I also know that it is your job to teach people how to invest. So what is there
Right.
to learn more? Like, what are the other considerations or maybe common mistakes that people should avoid?
Right.
And therefore, you know, maybe attend one of your webinars.
So I think what we do different is this, right? So we educate people that there are different stages of investing. So firstly, it is someone who doesn't invest, they are just saving, and this is where you'll really lose out big time because of what's happening to the world. You know, cost of living is increasing due to the money printing. And then if you decide to invest in S&P 500, do not lose out. So at least your money doesn't erode due to inflation, right? Even though inflation is 5%, but I really doubt it's 5%. If you really go and look at your bills, how much more you're spending every single year, I think it's more than that,
More, yeah.
right? And you know, if you are happy with that, maybe just earning slightly a bit higher than inflation, then you're fine, right? But if you want something more, right? If you want to grow your money at higher rates, like 15, 20%, I know this sounds very hard to imagine for some people, but if you can choose companies that grow their revenues at more than 30%, right? That means they're going to become 30% more valuable each year, right? Because they're growing their earnings, they're growing their revenues, right? And you have these hyper growth companies, some of which are growing at 100%, right? And I think, Michelle, you as a business owner, it is not hard to imagine, right? Because I mean, when you start small,
Yeah.
right? I mean, if you
Actually, we have grown at more than 100% since last year.
10,000%.
Yeah, not 10,000 lah. Maybe like
10x.
150 maybe. Yeah.
Right.
Yeah, it's doable.
Yeah, so this is what businesses are experiencing in real life, right? These software companies, they're scaling up immensely because, you know, they're just selling software.
Yeah.
And for them to sell another software, it doesn't cost them additional money.
Yeah,
right?
that's
It's
the
not
best
like
kind
you
of business to be in, isn't
yeah.
it?
It's not like you are selling food or what. And that is why I think I'm a big advocate of selling courses because, you know, for each person that you sell more, you don't actually incur a higher cost. And
Yeah.
it's very scalable, right?
Yeah.
Which I think this is what you do very well. And because you have these hypergrowth companies, right, you can actually expedite your journey to hit your first $1 million, right? So our vision here is to put one investor in every household. I think just like you want to empower a woman in every household or something like
every
that,
mom,
right?
yeah.
Yeah, every mom. So for us, we always believe that I think to elevate the quality of life for everyone, you just need one person who knows how to invest in a household, and then you can really increase the standards of living in the community, right? So from there, we actually are more niche. So if you want to grow your money faster, you want to become a full-time investor eventually, you have to pick stocks. You can't just buy the S&P 500. So that's how we're different from...
This is a step more advanced.
Exactly,
Right,
right.
okay.
So if you compound your money at 9%, I think it will take about 30 to 40 years if you invest if you put in $500 every month, right? If you were to compound your money at 15 to 20%, it'll take you about 9 years to actually hit $1 million if you put $500 every month.
Wow.
Yeah, 20 years, sorry, 20 years.
Okay.
Yeah. So
I'm like 10 years. Whoa, I start today.
yeah,
20 years, okay.
20 years. Yeah, so
fair
if
enough.
you can get 30% and, you know, this is something that is more niche, right? It takes more experience, but eventually if you really do master it, if you learn it for 5 years, 6 years, you can actually achieve such returns, right? And we have picked a few companies that have gone up by 10x since we saw it. So one of them is, have you heard of this company called Shopee?
Shopee, yeah.
Yeah, Shopee is listed, you know.
Oh, is it?
Yeah,
Okay,
yeah. It
didn't
made a lot of money during the COVID period.
know. Yes,
And-
everyone started just buying online. Those people who were convinced with buying online had to buy online, right?
Yeah, and how we came about this idea was right. We went to New York, we met a fund manager, and he was telling us about this idea, and it was very interesting. And it was like $30 over back then, and then now it's like around $280 to $300.
Nice.
Yeah, so a lot of these companies are actually companies that could be under your nose, right? I believe a lot of moms will know
Shopee, shop on Shopee, Lazada.
Yeah,
you
exactly.
know that. Yeah.
Yeah, so this is how we're different, and this is what our course teaches. So we help people who really want to niche to become an independent full-time investor eventually, and they really want to get these skills. Yeah.
So when you talk about full-time investor, does that mean someone needs to spend 8 hours a day? Or you mean they basically could quit the job and be looking at investing alone?
Right. So how I define a full-time investor? I know when people think about full-time investing, it's like this.
Correct, you're just sitting in front of the computer and just trade, right? It's like, ooh, which one, in, out, and then have this thing on your...
Right. It's nothing like that.
Yeah.
In
So
fact,
what
it's
does
more
that-
of like just reading a lot about the company rather than looking at charts. And then the hard part is just the first month where you have to do research about a company. And once you have that conviction, okay, then it's just monitoring the company every single quarter, because every quarter companies will release their results. And that's it. So the hard work is at the start, and then eventually it's just, you know, once you know a company well, it's just letting it ride and do its thing. Yeah, so being a full-time investor means, I would say, maybe spending 2 to 3 hours a day just catching up on your companies, right? And I think, like I said, you have to have a certain portfolio size for this to happen. Like, I'm not going to...
What's the size?
Okay, so I kind of calculated this before. If you can, I'll imagine, right, for a mom, like just a mom alone, right?
Yeah.
Of course, the husband has to pull his weight, right? But let's just
Yeah.
assume the husband pulls his own weight. For
Oh,
a mom,
yeah.
right, I think $4,000 a month, is it comfortable for a mom
To invest?
to survive for the daily groceries and things like
No,
that?
it's not enough.
Not enough, $4,000?
Well, you got to pay for your kids, right?
But what if like your husband also contributes 4,000? That means it's like Dutch.
Oh,
right?
okay.
It's $4,000.
I guess it depends how
person.
many kids you have and like the quality of life as well. Right? But
Right.
yes, 4,000 should be enough.
Right, 4,000.
Yeah.
Right. So $4,000.
Like comfortable life still, right? Not
Yeah.
not like, you know, have to like skim on every
Yeah.
single thing. I think
Or-
yeah, 4,000 is it's comfortable.
Oh, why not let's make it 5,000 to
5,000
eradicate
-ish.
any doubt. 5,000 is quite comfortable, right, per month?
Well, my spend is definitely more than that, but also because okay, well.
But I mean, maybe you're seeing it on a household level, right? So if I say 5,000 for the mom, that means I'm assuming
10,000.
10,000 for the entire household.
That should be fine, yeah.
Yeah. So I mean, both partners pull their weight. So I'm just
Yeah.
looking at just one partner.
Yeah.
So $5,000 a month is about $60,000 per year.
Yeah.
And if you make a 10% return,
Yeah.
right, you need $600,000 to get 60K if you make a 10%.
Hang on, you're
return.
too fast. Again,
Okay. Let's repeat that. Okay, so $5,000 a month.
Yeah.
Okay, that's $60,000 a year.
Yeah, a year. Yeah, it's expenditure.
Correct, exactly.
Okay.
So now we need to find out how can we make how much we need to make $60,000 per year.
Okay.
Correct. So assuming that my investment returns are 10%, okay, I need $600,000
Oh, yeah.
to generate.
Invested.
Yes, invested to
Okay.
generate $60,000.
That's the problem where to find
Yeah.
600,000. Okay.
So I think definitely I'm not saying that it's easy, right? But a lot of people have this mindset that they need $1 million, $2 million, $3 million to actually retire and be comfortable, right? So let's say if we were to lower down our expectations, let's say we are very prudent, we want to,
Yeah, I think a lot of people, have that think that, oh, if my current lifestyle is at $10,000, I need $10,000. But really, your kids would have left home. You may have downsized to a smaller place, right? Or
Right.
you will still want to travel once in a while.
Yes.
So really, like you say, you really don't need that much to retire on.
yeah. And I think like assuming your kids are all independent and
Yeah.
everything, I think $8,000 for one household, that means for each partner
Yeah.
puts in $4,000,
Yeah.
right? So let's assume the $4,000 case, right? So $4,000 per month will mean $48,000
Per year
and that would mean $480,000
invested.
invested,
Yeah.
right? So if you were to put it in a financial, if you put it into a Excel calculator, right? You don't have to wait 40 years to hit there. You don't have to wait like so long, right? It's much closer than what we think it is. Yeah, so that's, I think, a saving grace. And of course, if you can have a higher return, for example, can generate 20%, okay, suddenly that amount becomes half.
Yeah. And also with the compounding interest, if you continue to invest whatever you earn from
Exactly.
there, right? So it's
Right.
possible.
So that's the beauty, right? So if you have that skill to generate 20%, you can actually, so let's talk about the $5,000 a month, that's $60,000 per year. Okay, and to generate $60,000 per year, you need about $300,000 invested. Yeah, and then you can get $60,000 per year. Yeah.
Right.
So it's just $300,000. Now I'm saying just not because I can't empathize and not because I'm wealthy.
Yeah, but the people will
Yeah.
be like, so where do I find this 300,000 invested? But it's not like immediate 300,000. Right? You're talking about the
That is
the
where
average cost, every
Yeah.
500 or something, right?
Yeah, that is where they sign up for your course to generate income and be a business owner, right?
Right.
Like, I think there's really no way out. You either invest or you be a business owner. And if you can't be a business owner, if you're not confident, then there's nothing wrong with working for a salaried job. But that's where you really have to beef up your investing game, right? But if you're a business owner, you can generate decent income for yourself. Then you don't have to be so tied up on the investing side.
Right.
Yeah. So that's just how I see it.
Okay, so how much should someone invest in their earnings? I said 10% of their monthly, whether they're in a job or taking salary from their own
Right.
business. How much would you advise a mom who have family commitment to invest in a month?
Yeah, I think
How
it's
many
very.
percent lah, I would say.
I think it's very subjective, right? Because, for example, if like the daily expenses for a household is like 4,000, and if you're a high income earner, let's say you earn 20K, then of course your savings will be much
Okay,
more as a percentage.
let's just take like average income. What's the average income now?
4 to 5,000. No, for mom, actually I don't know. Like,
Oh!
it depends, right? It depends
Okay,
on how
I think
they
what's the average income in Singapore right now?
like 4,000.
4,500?
3,500 to 4,000. Maybe.
Yeah, so then
Yeah.
let's say 3,500, they expenditure, like really saving a lot, 2,000. They have 1,500 extra. Should they put all 1,500 into investment or?
Personally, for me, I treat my savings account as my investment account.
Okay.
So apart from the emergency funds
Yeah.
that you have to set aside,
Yeah.
I will plow all my savings into the investment account. Right. So of course, I think for a family, because I'm single, but for a family, I mean, after accounting for all the things that you need to set
Correct.
aside,
Yeah.
right, for the savings, I would say, if you are not fully investing your savings, then it's going to erode in the bank.
Right.
And there's a huge opportunity cost as
Yeah,
well.
yeah.
So I'll advocate invest as much
Correct.
as
Instead of
possible
putting
as you
money,
can.
the money in the bank should just be that emergency fund money, which should be between 6 months to a year
Yes.
of your living expenses.
Yes.
Why we're saying 6 months to a year is because if you need something by 6 months in a year, you probably could find another job by then.
Yes.
Then you can, yeah. So if
That's
people are
safer.
like, not sure about why is this emergency fund thing.
Yeah. And-
So then you would put everything, yeah. Because recently I had this conversation with my husband as well in terms of investment because
Your husband invests, right? If I'm
he
not wrong.
does, he does, yeah, because he's in investments. He's he's an equity analyst background.
Nice. We'd love to meet him.
So he always he invests and stuff. So we're having this conversation. I ask him, so really, because we manage our own finances, we don't combine one.
Right.
So, so I asked him, so how much do you invest in actually? It's like 90% of my net worth. I'm like, oh, okay. And then I'm like, how much do you? I was like, I have no idea. So I really finally have to do like a schedule of assets that I have and put there. And then I realized I've only been investing 30%
That's pretty
of
good
my cash flow.
for like someone who has 3 kids.
But I should invest more. I have a lot of, sorry. It's,
Oh.
like, it's as if I'm like showing off, but it's like a lot of dead money in the bank that's not being utilized.
Right. Oh, okay,
Yeah.
okay. From that perspective, right.
From that perspective, yeah. So it's like, oh, I need to start, like you say, slowly put in
Yeah.
a bit more, yeah.
I think start slowly, because like the last thing again is you want to have a heart attack, and then
Yeah.
because if the first time you lose money is a huge sum of money, then you will associate a negative feeling towards investing, which may not be the true representation of what you could have achieved in the long term, right?
Yeah.
Maybe if you didn't panic and sell out of fear when it drops, maybe if you just held it for a year later, you could see the gains coming in.
Correct.
So investing is not like school, right? I think we are just, I mean, I don't want to criticize school, but sometimes we are indoctrinated in a way where we feel that if we put in effort, we should see the outcome.
Return
right?
immediately.
Exactly, pretty immediate. Because I mean, in school, the more you study, you can see immediate feedback, right? For your results. But for investing, it's very strange. The results always come in exponentially in the last few months or in the last few years. Right, and then you could be like sideways for like a long time, and then the results only come in exponentially in the last few periods.
Yeah.
And that is very hard for people to take, right? That delayed gratification is very, very tough. And that is why, again, I say, don't set yourself up for failure. Don't use money that you need, because
Yeah.
when you start thinking you need this money, then you'll be very panicky about this amount of money. Yeah.
Yeah. What changed it for me is that, I always shared that, I didn't grow up with much, so I did have a scarcity mindset and I'm afraid of losing my
Right.
money, right? Every money, like, save as much as I can. And what did it for me is that, why am I willing to invest and not be scared, is that I know that if during a downturn, as long as I don't sell, it's just that it's loss on paper.
Right.
It's just on paper.
Yeah.
As long as I don't sell.
Yeah.
If I just keep the faith, like you said, just keep it. It's like a savings. And
Yeah.
eventually when it goes up, I have that money. But really, when you put your money into the bank right now, it's still paper money, right? You see that figure on a piece of paper on the screen. You don't physically have it.
Yeah.
So whether it's negative or positive, you don't have it. So don't
Yeah.
worry when it goes down. Yeah.
I think there's this illusion that's costing a lot of people money, and that's opportunity cost, right? People only think about what they can lose, but they don't see that if I do not do something else, what is my opportunity cost of not doing that something else?
Okay.
Right? It's
Now
really
that you
high.
brought up opportunity cost, then people are like, but if I put my money into stocks, what about my opportunity cost to go into like property and all the other investment?
So I'm going to say something controversial here.
Right.
I think stocks can generate higher returns than property, but I understand property has some leverage and everything. But again, it's very two different school of thought.
Right.
So for me, I've actually told myself I will never want to invest in property, but I will buy one for residential purposes, right? So I won't see my property as like a investment.
Right.
I'll see it as an expense, right? But for stocks, that's where I'll actually invest, because you think about it, I always like to think about how can I invest in something that can create value, right? And I actually talk about this in way back, and I just think if you look into Hong Kong, I think it's very sad that people who are flipping properties are costing the young adults, right, a hard time to actually buy properties, let alone rent, right? So I think the people in Hong Kong, they're actually spending close to, I think, 40 to 50%
Super crazy.
of their income on rent.
Yeah.
Not even mortgage. I don't even talk about mortgage.
Yeah.
Rent alone
Yeah.
is 40 to 50%. And then I asked myself, like, I mean, this is a bit altruistic, right, in
Yeah.
thinking. I just asked myself, do I want to invest in something that doesn't really create value? Because a property is a property, right?
Correct.
it doesn't grow over time. The size doesn't grow. It's not like a tree. It doesn't grow,
Yeah.
right? So when you make money is when people perceive that your property has a higher value, right? Same as gold bars, right? 1 kg of gold is going to be 1 kg of gold in
Correct.
10 years' time. There's no
Yeah.
value creation. But if I invest, for example, in Tesla, I am investing in something that is growing and is creating value for the world, right? And I always believe that as long as you put your money where value is created, you will do well. Yeah, it's just hard to imagine, like, you know, if a company is doing a force for good, it's doing good, it's solving problems, it's solving pains.
Yeah. And also the employee that they employ.
Exactly.
It's creating jobs.
Right. So, you know, there's no reason why they shouldn't grow, right? So, one great example is Tesla, even Apple as well, right?
Yeah.
They're creating value, they're making things more seamless, right? They're making things very, they are giving people a good experience.
Correct. Yeah.
Right. So that is why, you know, money goes to them. So I always feel that the size of the problem that a company is solving will be the size of the company. Right. So
Yeah. I
so
like that.
I feel like I don't want to burden my future generations or even my generation by going to property investing, but I will still buy a property. Don't get me wrong. Don't flame on me. I'm still going to buy a property. I need a place to stay.
Yeah,
but
yeah,
it's just
yeah.
that I will not
but
play that
you will
game.
not play that game.
of
It's
flipping.
not for you. I think it's not for everyone. I think
Yeah.
it's up to you which one you're more comfortable with and
Yeah.
which one you have more
Yeah.
interest in. Some people are just not interested in studying business, right? Some people are just, I love property, love looking at, you know, the build or whatever. You know, some people are just built that way. So
Yeah.
I
And-
think, yeah.
And I think maybe 10, 20 years ago in Singapore, it's maybe easier to make money from property investing. But I think with the recent regulations where the government is slapping like taxes,
Yeah,
very
yeah,
high
all
taxes on
that.
second and third property,
Yeah.
then I think, you know, it may be a barrier to entry.
Correct.
I think for stocks, I can't think of a better place to live on earth. Like, I'm very grateful for Singapore, right? I know not every government is perfect,
Yeah.
but I think this is something in Singapore got it right, right?
Yeah.
We are a tax haven. The world knows it, right? You're not taxed on capital gains.
Yeah.
In the US, Uncle Sam taxes you
50, right?
50,
Is it 50 or
can't
something
remember.
half, like a lot?
50% on income, but I think on
Oh, yeah.
taxes it's 15 to
15,
20%.
okay.
Right, so, you know, imagine like you're the one researching the company. Why does the government have to take a tax
Yeah.
on it, right? And then there's no tax on dividends as well,
Yeah.
right? So I feel like, you know, we are, in terms of the taxation angle, stocks resonates with me.
So before we wrap this up, what's the one advice that you would give someone who's thinking of, you know, either going into investment or finding out more about how to maximize their investment to 20, 30%, like you mentioned?
Right, I think if you want to maximize your return to 20, 30%, then that's where, of course, you can check out some of the free webinars I do, and also my YouTube channel. In fact, I've picked one company that's gone up by 100% since I covered it. And basically, it's very transparent, right? I give up openly because I really want to help more people. Secondly, if you are not the kind of like stock picker, because maybe they are like your audience, they're like busy doing business,
Yeah,
they just
busy
want to be
with
more passive.
Kids and stuff, yeah.
Yeah, I think the number one thing is to really just open a brokerage account, because if you don't have it, it's like you go into an exam without a pen or a pencil, right? You can't even get started. There's no chance even for you to get started. So get started with your brokerage account, start small, and then when you want to put in more money, get educated first.
Okay.
Right, education is very, very
Yes,
important.
definitely.
Yeah, and there has been a lot of proof that investing has worked out for a lot of people, especially through this S&P 500 method. So don't get discouraged if you see short-term losses, right? Just hold on, give yourself that opportunity, give yourself that chance to experience what investing can do for you for that next 3 to 5 years, right? Try out for a year, try out for a year or two, right? Before making judgment, right? Because investing it's not like school. You don't see that instant results immediately, right? It is a long-term thing. And then I think one thing that I always like to guide myself is that, will my future kids, because I don't have kids now, will my future kids be proud of my investment decisions, right? And that hits me hard, because every time I feel like speculating, you know, I mean, no matter how experienced you are, I mean, I'm doing this for 8 years, you still have itchy fingers every now and then. So I ask myself, will my kids be proud of me making this buy or this investment decisions, right? So I think for moms,
That's a good question to ask ourselves. Yeah.
yeah, so for moms, you can, I mean, if this is for your kids' college education, maybe like you're saving up
Yeah.
for the long run, you know, this is for your kids' future, right? You want to ask yourself, is this how you're going to handle your kids' future money, right? And then that's where you'll be more grounded, and then you feel more zen, yeah? And then when you start seeing things from a long-term perspective, you'll be more stable.
Yeah. Yeah,
Yeah.
I like that. And that's actually one of the things that I would consider as well every time I'm about to try something new. Like, is this a behavior or is this something that I would want my kids to emulate, right?
Right, right.
And okay, before one more last
Yes.
question, just because I want to throw this in, this is
Sure.
like a hot topic right now. Do you invest in cryptocurrency or NFT?
No, I do not.
Okay, thank you so much, Jonathan. That's been very enlightening, and I hope that you found value in this episode. And if you like it, be sure to like, subscribe, and if you are listening on the podcast, do leave a review and let us know what you enjoy about this episode. Thank you for joining us, and see you next time. Bye.